Hello and welcome to a brand new episode of ET Markets PMS Talk, a show where we discuss the opportunities as well as investment strategies deployed by the fund manager in the popular space of ultra investing. Well, my name is Shatajan, and today we have with us a very special guest, Rohan Mehta, who is the CEO and fund manager of Turtle Wealth, who manages over 400 crores. Welcome to the show, Rohan.
Thank you.
Thanks for being part of the show, Rohan. Now, the 212-degree wealth mantra and the growth mantra scheme are fairly recent PMS schemes in the multi-cap space. Now, tell us more about the product and the performance.
Yeah, so we are onto my understanding, being into 17 years into markets and managing millions of money, is that if you have a process, then you eventually can win over the human emotions, what we all have. I think the process over the period of time outperforms the performance, and that's what I being a spiritual fund manager or an investor would believe that. So for a very clear point of time. Honestly, the wealth mantra is a process of, first of all, it is just a two flavor which we have added, being the Chinese wall. So first I'll let you know that how we pick up the stocks, and that would be more interesting, and then giving you a definition of what wealth mantra does and growth mantra does. So wealth mantra, so first of all, we find turnaround businesses where we have seen in last 25, 30 years of Indian markets and foreign markets that most of the money has been made in turnaround businesses. So the biggest crux came it how to pick up the turnaround businesses, where we invested nearly about 8 years of our study, that we have found you can't say a formula, but a way to pick up, that businesses. So we find that the companies which are doing turnaround has three P's into common. The first P is price. So first of all, we pick up companies which have consolidated for last 10 to 15 years, which has not happened nothing has happened into this business for 10, 15 years. So first, the stock has to be an all-time high in the whole consolidation zone. So we buy only all-time high stocks. Now, when it becomes all-time high, a value investor will come and say that, oh my God, Rohan, you're buying an all-time high, you should buy stock which is a 52-week low. But we have to understand that we are buying stocks which are not only all-time high, but which is consolidating from last 10 to 15 years. So eventually you're buying something which is very low only. And second factor to it, when the price factor comes, the second factor to it is that in larger one scale, at least minimum one scale on 1 year on the scale, it should outperform Nifty 500, which is our benchmark to the price side, and it should outperform its sectorial index. So like, for example, when I'm buying in Mahindra and Mahindra, it should outperform an auto index, and it should outperform Nifty 500. It should be an outperformance of all-time high with a long consolidation. So this is my first price as an indication of which stock is going to do better and better. My second is that once this screening is done out, we go to our fundamentals to check onto the business. What is the turnaround which is happening into the business. Right. So now, why this company getting out of that 14 years or 10 years of exile period wherein nothing has happened into it. What are the things which are getting turned around into the business? Is the stock which has done an all-time high pat also. We only buy stock which does an all-time high pat. We don't buy stock which is into mid zone of the business. So we have made it so crystal clear that tomorrow an investor knows why we are buying a stock and why we are not buying a stock, right? So that is second is, understanding it, getting the nerves of the business. And then the third part is people, and we go and meet the management. We understand what is happening, turning around the story, why this company is doing what, and what are the next 4 to 5 years goals of the company. See, when you meet a management, it's like, Warren Buffett, having this axiom quote, which I love it, that you should never ask a barber for a haircut. He always says yes. So, so you just need to understand that I recently met a management, an IT company management. My only question to them, I went to Hyderabad to meet them. Only one question to them was that why, when all the IT was not doing good, you were all the IT were doing good, you were not doing good, and all the IT were doing worst. Are doing worse and you are doing amazing. Give me one buy. That's only my question, because I don't want to know, what are the orders, because they are going to be extremely illusion. Tomorrow you have, today you don't have. But if the strength of the ecosystem of the business is there, then we will buy. So these are three great areas where we pick up the stock. So for example, I'll tell you, we will not have companies like, let us say, Vodafone's in our business. We will not have Yes Banks. We will not have Suzlons, because then that's not that I don't want to. Sometimes I also am extremely emotional, right? I'm also human at the end of the day. So like at 1,000 rupees, I also thought that Paytm was a great buy. honestly. But it didn't come. I can't buy because Paytm is not at all-time high. It is not at all-time high profits. Why? So that's the power of what I think. So an investor can stick with a fund manager for a longer period of time when he knows what it is, the way he's picking up the stocks. And either you get aligned or either you don't get aligned. That's okay. It's something that it's not personal. It's like either you get aligned, either you don't. Right. And then in this, we try to buy companies which are extremely value is higher than the price. I'll give you an example. A company called G Shipping, 14 years nothing has happened to the company, right? This company is available below its book value. Can you imagine below its book value with 3 times of price earning, where the whole shipping industry is getting a turnaround story into the business, and we pick great dividend yield, crazy dividend yield. And then you have to also wait for the time and see last Saturday or Friday, I think so, they posted a stellar number. And that's how the beauty about picking up the stock happens. Now I'll give you a buy between a wealth and growth. Eventually, before our PMS, we used to have the same thing. But then we understood that this both are a very different understanding for each other. So first, what we did was that we will only buy leaders into Wealth Mantra. So we wanted to give a first-hand experience for the people who have never invested into PMS. See, we are a boutique PMS company, so people are going to be first-hand investor many of times rather than a professional investor and coming to us. So we have to also understand what are type of investors we have. And second is what we got was, turning around business, that is growth mantra. So the companies which are not leaders, but tomorrow it could be leaders and in the range of 10,000 crores of market cap. That's a very sweet spot, I think so India has. Anything between 1,000 to 10,000 crore of market cap, great value, 13 years, nothing has happened into stock. Profit has inclined getting higher, but the price is at the same price. And there is a turnaround which is happening into the business. I think so that's a great spot where the, the alpha will be created. Right. So like, I'll give you a basic point. My first top 3 of Wealth Mantra is SBI, M&M, BLS International. So that is a myth that people understand that Wealth Mantra is only large cap. No, it's not like that. It's purely a mix of large, mid, small. We are purely sector agnostic and market cap agnostic. Now comes to growth mantra, or top 5 are like companies like Big Blog, companies like G Shipping, Raymond. Not much discovered, but people who are looking forward for something as a variety is growth mantra. Looking for something which is purely a decent without volatility portfolio. I think so it's Wealth Mantra.
Right. No, in fact, interesting methodology there, Rohan, and all these stringent criteria will only help us in picking the right kind of stocks, and you'll be able to catch them young, you could say that, because then eventually these small and mid cap stocks eventually become the large caps of the next decade or the near future. Now, I was actually going through your fact sheet. I wanted to discuss this. You have this, your mission. And it is to give investors an amazing investing experience by growing the wealth by 10 times in 10 years in turnaround businesses. Tell us how, how that will happen. A bit of it you already explained, but, in case we've missed out something, please do let us know.
Sure. So I have been always into the point of, giving a great experience. So I'm always been a lover of, traveling extreme 5 stars, means the best of the best. Okay. Why do that? Because it's a great experience. People want to pay for a great experience. We believe that, can we do some certain things? Because see, PMS, in what more you can do? So I'll give you a very small thing what we have done, and it has changed the thought process of our investor. So we created, so we only manage ultra HNI. So we know that, anything above 50 lakh, 1 crore only we have to manage. So now there is a big constraint that people don't want to know that in a city like Surat, because most of your clients are from Gujarat, they don't want to tell that maybe invest around. This is also, they don't want to know each other. That's a very private. So we started a community group in WhatsApp where all the investors have been linked. Nobody knows who are into it. Yes. And we actually post certain stuffs onto stocks by every day, educating that what are the stocks doing, what are the business all about. Because there are two types of investors and both are risky. One who doesn't see at all and one who sees every day.
Okay.
we have a fear for both of them. So we want to educate that, see, it's a long-term story. It's not a short term. It's about business to business investing. It's not about buying today and getting higher tomorrow. Secondly, why 10x is that because, see, first of all, we believe that this sweet spot of 1,000 crore to 10,000 crore has this amazing power of getting 10, 15x in next 5, 10 years, where Indian economy is going to be unbelievable. Means more than what we can think. And it is bigger than yesterday and much smaller than tomorrow, which I always say to my investor.
Right.
So I believe that if we can compound by 25, 27% over 10 years, and that's have been our pre-record of PMS also. So of course, it's this record is not a justification that we are going to create, but that's our mission. See, I think so. We have to create a point that, okay, what is the level we want to go? What is our benchmark? 5,500 as a benchmark. This is what is our benchmark. This is our benchmark. That's not a guarantee, but we try to buy companies which have this level of working, right? So that's where our thought process comes from.
Right. So in fact, cut short that the investing years, or at least, someone who's looking to invest in one of the PMSs is around about 10 odd years, that he should be, comfortable with whenever he or she or the investor is putting money into one of your schemes. Now, you've taken through three P's of the total wealth. What are the 5 P's of total wealth? If you have to take it in a 360-degree kind of a way.
So yeah, so generally it's more about, I think so, what we have two very unique thing. 3P I already told. The 2 P's I would like to add is, first of all, we decide when to exit before we enter a stock.
Okay.
I think so. That is one of the see, I have been into markets from 2005, and I've honestly seen more blood in markets than more money in markets. People, it's so easy to say that it's Bajaj Finance or HDFC Bank, but then you also have seen companies which has gone totally bust into the markets. So what I've understood is that if I can put my exits, there are 2 benefits of it. One, I will exit if the stock is not performing. I'll not emotionally attach with the stock. And second is that if my exit is there, I can take my stock to a much higher level, which maybe I would have got a fear that, I want to book it over here, it's a high value. You don't know. I still remember when I got Aisha Motors in 2012 at 4,000, we bought it at 500 rupees. I thought 4,000 is too much. Now you should book it. And then that stock went to 20,000. Like, how much X you created? That's crazy, right?
Yeah.
So we don't follow a pure model portfolio model. So when a fund comes to us, the allocation of the fund is purely decided by the quants.
Okay.
We don't decide. Stocks remain same, but the allocation changes accordingly as per the risk and reward of the stock eventually. So it's purely a methodology where exit price are decided into 3 variables. One is the price when we will exit. That can be a technical side of it. Second is we decide what happens if the business, what are ifs and buts. If business doesn't good, we will get out of it. And third, on a very slang language, I'll say Jamai Raja stock. When a stock is there, nothing happens in the stock, right? So I'll give you an examples. We had TCS good 3-4 years, and we understood that now it's very hard for TCS for growing at that pace of level. You would be surprised. We exited TCS and we bought a company called BLS International, which is into visa services, an IT traveling business. But yes, still we did it. So now why we did it? Because we understood that creating an alpha in TCS would be very hard in place of creating an alpha in BLS. Though it is a successful example. So I'm telling you, I have also failure examples also.
No, absolutely. We'll definitely touch upon those as well in case we have time.
And last thing we do is that for somebody it could be important, for somebody it could not be. We only buy companies which are human friendly. So we don't buy animal killing, we don't buy liquor, we don't buy tobacco, we don't buy leather, we don't buy casinos, and we only buy ESG compliance. So that's where our focus has been. Our most of money in next 1-2 months, which we are targeting, has come a lot from international point, because for there this is a very important part where India mein shayad hai nahi hai. It's still getting mature.
Right. So social responsible investing.
Yeah.
All right. Well, the next question, I'm sure a lot of your investors would be asking this question. So, how do you manage risk in the portfolio? I think some of it you've already explained that a part of it is usually looked at from the quant perspective,
Yes.
right? But whenever you go to a client, is there any one or top two questions which they usually ask you?
Yeah, everybody asks, "कि क्या return मिलेगा?" And I always say that, so I'll tell you a story which has happened to me. I
Uh-huh.
also got so much into that red race of AUMs and getting returns that
Hmm.
in last 3 months, I've come down out of it.
Hmm.
I've understood that if it makes me happy of the same process what I have bought,
Hmm.
and if it does good, and if it makes me sad of the same stock what I bought and it is not doing good, it's not the right thought process I'm going to go for a longer period of time. So I tell investors three things which I always say. First, 5 साल के नीचे, like I say, 2100 days is a minimum required time. 20% portfolio नीचे जा सकता है,
Correct. The
20-21%.
drawdown.
That is, yeah, COVID comes and you don't have anything to
Oh,
talk about.
absolutely, absolutely. Black swan events we can't predict,
we
and I
can't we
can't.
can't do it. And the last is that कि loan का पैसा मत देना. Don't give me money which has been borrowed or been taken from CC or
Hmm. Hmm.
overdraft facilities, because at the end of the day, we are not magicians. We
Hmm.
are the
Hmm.
people who can buy right stocks, but we also don't know what is going to happen over a longer period of time.
True. True.
So I tell people that we have a funnel vision, but because it's very curated stocks, we can have very tunnel vision on that stock point of time. So that's what we can have.
No, no, absolutely. In fact, that's the right way of approaching it. Now, let me also quickly come back to the schemes. Since both your products are from the multi-cap space, so how should one play the small and the mid-cap theme in a broader perspective for the year 2024?
Yeah, I feel there is a great value in small to mid cap. I'll tell you, I meet at least 2 or 3 management in a week.
Okay.
Because of course the numbers, this is a season time,
Hmm.
because
Hmm.
companies are also doing. Let me tell you that the space of what money is going to make been made is in from 1 to 10,000 crore of market cap, right? And I'll tell you a very small example, not a recommendation.
Hmm.
In a company called Link Pen,
Okay.
we just went to meet this guy who didn't do anything good into pen division. And what pen means, like, I never knew that pen markets are big, so big, right?
Hmm.
Because
Hmm.
how you can categorize pen into which market?
Okay.
Stationaries, FMCG.
Hmm.
And this guy came out with this pen called Pantonic.
Hmm.
And how it happened was that I went to once with my daughter for buying some stationery,
Hmm.
and people were coming and buying this Pantonic box, and I was like, is this free or something? And then we meet the management, and he told that we created a pen where uh, banti hai 5 rupees ki, you're manufacturing at 5, we're
Five.
selling
Yes.
at 10. It's a 40% of gross margin. And I was
Hmm.
like, are you serious? And he sells 85 crore pen in a year,
Okay.
and that's without export. That's just a part. And if I'm sure when we were in school, we used to crave for a pen called Mitsubishi.
Hmm. Hmm. True.
Amazing pen, very expensive
Amazing.
at that point of
Very
time.
expensive at that point. Yes.
If you are a
Yes.
middle class family.
Yes. Of course, I remember. Yes.
Yeah, they have the rights of selling in Uniball. They have the rights of selling it in India. They have taken Delhi. So now what happens is that when you understand this business in depth, you understand that he has created something which is going to be robust for next 5 years.
Hmm.
And you are getting at a market cap of 900 crore. Honestly, a leader of pen in India.
Hmm.
So now this
Absolutely.
is, and I'll tell you one more thing. People feel that big companies are not going to create big wealth. It's also not right. A company like L&T, which is 14 years, nothing has happened into this company.
Hmm.
Look at the book orders, what they have got. Look at the way the things are happening in last 2 to 3 years. Uh, it says that it will not do good, but we were all shocked when Warren Buffett took Apple's stake at $900 billion, and from there it went to $3 trillion.
Right.
So I think so. It needs to be mix of all the structure into your portfolio, but I think so. The space of more. So I put it this to my investor:
Mhm.
the small companies with 1 to 1,000 crore market cap should be a bit low in allocation because they have the bandwidth of creating higher value in your portfolio. And the companies who are larger like L&Ts and M&Ms should be more allocated in your portfolio, because there has to be a percentage growth, wherein the smaller company, it could be the multiplication of growth.
Okay.
So if we can mix both together, because in bad times, these companies are going to go down. And this company is like, again, I'll tell you an example of a company like Power Grid. We bought it 2 years back. People used to tell us that, what the heck, you have bought a Power Grid, how this will happen? I'll tell you, it is an 18% CAGR stock.
Okay.
With dividends. So
No, that's
it's a mix.
absolutely.
We don't have only one perspective of, okay, this is only we will do, but rather getting turnaround stories is our theme.
No, absolutely. In fact, it's an interesting space, and I'm sure there's a lot of learning that you're getting while interacting with the management about the product profile and the growth opportunities which the company offers. Probably at that point in time, price did not sort of represent what the company can do in the near future. But I think management commentary, and while you interact with most of the management, you get a very good idea as to where the stocks and the company is headed. Now, you did touch upon Paytm and why you were not keen to add this particular stock in your portfolio. But let me get a general view from you on the new age companies. Some would promise big growth potential, but might not be making profits.
Yeah, very true. See, I believe companies like Zomato, Paytm, or maybe companies like Nykaa, all companies which they have created dent in the markets, right? Like today, when you are at home, you don't want to go out and you want to go to a restaurant and stand on a queue. You just want to do. I'll tell you, I love this juice of Ville Parle, which is this 3-5 berries juice. I always went to Mumbai to get a juice at Ville Parle, taking all the traffic of maybe 100-200 rupees juice. Right. Now, wherever hotel I am in Mumbai, I'll just do a Zomato and I'll get it because I love that juice, right? I'm sure everybody has this own favorites of their own.
Yes, absolutely.
Yeah, so I think so that's they have created. Last 2 years, I don't carry a wallet in with me, no cash, because everywhere. Right now, I am at the most under Karnataka area, and not a single store says that I don't have a UPI, right? And that Paytm. So I think so they've created a dent. They have created a space. I don't think so there is any point of thinking that these companies will not create value. Now the only question comes is when. So I don't know when it is going to happen, but I think so the worst over the period of time has happened into the company. I don't think so more worst may have. Now this is the gestation time, which is honestly the most painful time for a stock.
Yes.
When a stock dips, it's not very painful because try to find good price to buy. When a stock goes up, we are all happy. The time is when stock doesn't do anything. That's where I think so. Maybe 1-2 years more down the line, if it takes, I would be more happy to buy all these IT companies when it comes to my framework.
Right. Now, lastly, we did touch upon the exit part of the price, but why exiting in a loss still makes more sense than averaging in a portfolio approach?
Yeah. So one thing I've learned is that averaging is a sin if it is not onto the higher part. I'm a big IPL cricket fan. I always see that 11 players, the most performing gets higher reward of getting higher and higher. The ones who doesn't perform gets out of the business, and that's how the portfolio also works for me. The performer comes into it. Maybe they will all 11 will not be in the form of hitting a century, but at least for a captain, the most important part is to find that top 11 where they can perform. I feel that. And at the end of the day, they perform or not, it is not in your control. You have to strategize it well, that who can open the bat, who can open the ball. So that's where who can give you the highest allocation, the lowest allocation, depending on how the company has been forming. I feel that I have seen 2005, I have seen 2010, or maybe I've read from 1950s or tulipomania. We forget the companies who have done bust. We forget it. Our memories are very, very small. I'll give you an example. I had a company called Punjloid. I don't know, you remember a company?
No, of course, yes.
Which was been told the next L&T. And being a very naive investor at that point of time, I thought this company will outperform L&T, which eventually went bust. And then I can see hundreds of names where they were the best companies. So we did a research of Nifty 50 companies. You would be surprised that nearly about from 2005, nearly about 70 to 75% of Nifty 50 companies has been replaced by some other stock.
Right.
So if Nifty 50 would be the same allocation what it was in 2008 rather, or 2010, today Nifty 50 would not be whatever, or 18,000 or 18,500 what it would be. So if Nifty has the strategy of flushing out the non-performer and adding up the performer, then I think so for a portfolio manager, it becomes mandatory to have more edge than Nifty 500 or Nifty 50, because we have to consistently see that what they are doing and how better we can outperform. So exiting, I would be happy as a portfolio manager to be on cash rather than holding a company which has not been outperforming.
Right. Well, beautifully put there, Rohan. And on that note, thank you so much for your time. And that's all for now. But do stay logged on to etmarkets.com for more on news, business, and economy. Again, thank you so much for your time, Rohan.
Thank you. Thank you. It was a great chat with you. Didn't feel like an interview, but it was amazing.
Thank you so much for your time, sir.
Yeah, take care.
Yes, sir. So it
Right.
went well.
Yes. Perfect.
So
ठीक
I'll
है.
send you that V share link, sir.
हाँ.
Yeah. Thank
Great.
you. Thank you. Sir.
Okay. Thank you so much. Bye-bye.